there's nothing that I'm seeing in these fundamental factors that leads me to think that this is a long-term change in inflation or inflation expectations. We are seeing pressures that are real, but most of the evidence in my mind seems to be that they're going to be temporary, even though they are real and people are having to pay it. But the challenge is if we overreact by saying, let's just change the path of monetary policy to try to deal with a one-time effect, that could lead to a worse long-term outcome for the economy.
Continues and supply bottlenecks unwind, we can expect the price pressure on goods and services to normalize gradually. As a result, we still see inflation moderating in the next year, but it will take longer to decline than we had originally expected.
Raising interest rates isn't going to, I'm afraid, supply more gas or isn't going to supply more computer chips. The risk for us is that we also see that in this recovery, the output gap is now, approaching being closed, and the labour market in particular looks tight. And that's the big issue at the moment.